Day trading taxes in Canada. How exactly do you do it? And can you trade with a TFSA account? Since I'm a proud Canadian trader, I've gotten tons of questions about how to handle taxes so we do not, God forbid, anger the CRA. Trust me, you do not want the CRA going after you. Before we start, here's a mandatory disclaimer. I am not a CPA nor a financial advisor. I'm not licensed. I don't know anything about taxes. Everyone's tax situation will be grossly different. It's your responsibility to ensure all your taxes are filed correctly and legally by a tax professional. I have no idea what I'm talking about. I'm bad at math, and I didn't even get straight A's in high school. Okay, I lied. I totally did get straight A's, but just A's, not like A+. And if you're Asian, you know that A's stand for average. I've never actually prepared taxes myself. I've always consulted my CPA every year. For this highly requested video, I booked a business tax consultation with my CPA, so this video is simply what I learned after a 1-hour consultation session. It's not meant as financial or tax advice. This video really took a lot of time and money to make. I had to pay for consultation, prepare notes, do research, and take notes throughout our session at her office, all just to make this video. So if this video helped you out in any way or my bad jokes made you laugh just a little bit, all I ask is for you to drop a like. That would really mean the world to me and make that expensive consultation session well worth it. So is trading income considered capital gains or business income? This is perhaps the biggest question many Canadian traders have because business income is just like your employment income. Let's say you make $10,000 from trading, and that's considered business income, and you're in a 20% tax bracket. That means you pay the CRA $2,000 in taxes and take home only $8,000. Whereas if you're filing the same $10,000 as capital gains, only 50% is taxable, so you pay 20% tax on only $5,000. That's $1,000 to CRA, and you get to keep $9,000. But you cannot just decide yourself and report only 50% of your income just because you say so. Life doesn't work like that. It has to be under the almighty CRA's rules. Whether you qualify as a day trader or an investor is mostly defined by these 4 factors. How often do you trade? How long you hold the securities for? The amount of time you spend on trading and studying the market? And how substantial your trading income is? When we're day trading, we're buying and selling really quickly within the same day. That's why it's called day trading, not monthly or weekly trading. As a day trader, I participate in the market every single day the markets are open. Most days, I'll make 1 to 10 trades. But there are days I make 30, 50, 60 trades or more because day trading is my business. Whereas if I was an investor, I'd probably only make 1 to 5 trades per month. Maybe I'll buy some Tesla shares when the stock crashed below $200 and sell those shares now, when Tesla reported earnings beats and broke above $600. An investor claiming capital gains holds securities for much longer periods, sometimes weeks, months, even years. Because that security is meant as long-term investment, not just a trading vehicle to take advantage of short-term price fluctuations. A day trader spends the majority of time in front of a computer, following news, staring at each tick on the candlesticks alone at home with empty takeout containers and dating app rejections. Oh wait, that's just me. Generally speaking, a day trader spends vast majority of time studying the market. Like I mentioned in previous videos, I spend 2 hours before market open preparing trading plans, and I'll actively trade for the first few hours of the open and near market close. And I'll put in extra 2 or 3 hours in the evenings studying the market as well. So the amount of time a day trader spends equals a normal 9 to 5 or 9 to 7 job because they're in the business of profiting from volatility on a daily basis. Whereas if you're an investor, you spend majority of daily hours on your employment job and only have a couple hours on weekends or monthly to catch up on the market. The 4th factor the CRA considers is whether you click the like button. Sorry, I had to do it. The 4th factor is how substantial your trading income is. This factor is a bit of a gray area because how substantial is defined differs for each individual. Let's say you work full-time as an engineer making $120,000 a year, and you make $10,000 day trading just 2 days a week before work. That $10,000 may not seem substantial compared to full-time employment income. However, if you're a stay-at-home parent or student without full-time job or other income sources, that $10,000 trading income would more likely be considered substantial under CRA definitions. That's why everyone's tax situation will be grossly different. It's important to talk to a tax professional regarding your personal trading income. You may have realized by now. Yes, I am a full-time day trader, so 100% of my income is considered business income and taxed at full marginal rate. I have a feeling if you're watching this video, you probably have to file your trading income as business income too. Just saying. But hey, filing trading profits as business income isn't that bad, well? Besides paying more taxes than you hoped for, because there are pros and cons to filing as capital gains or business income. If you're a long-term investor or casual swing trader who meets the 4 factors, the advantage is, of course, only 50% of income is taxable. But the biggest disadvantage is you cannot write off any business expenses against capital gains. So no trading commissions, borrow fees, no equipment write-offs, nada whatsoever. You can only write off capital losses against capital gains. Say you had capital loss from real estate of $2,000. You can write that off against your $10,000 stock market gains, so true capital gains are $8,000 and only 50% of that will be taxable. Another thing to remember when filing capital gains is the superficial loss rule or 30-day rule in Canada. If you sell a stock for a loss and buy it back within 30 days, you cannot claim the loss for tax purposes. This rule prevents investors from manufacturing losses to claim tax deductions on capital gains. So make sure to keep that in mind. Now let's talk about filing your day trading profit as business income. You'll likely be filing under self-employment or as a sole proprietor, and yes, that means 100% of your trading income is fully taxable instead of 50%. But the amazing advantage is tax write-offs. Almost anything you use to make trading profit can be claimed as business expense. That includes broker commissions, scanners, news alerts, trading DVDs, your internet bill, and even part of your mortgage or rent if you work from home. So the money I spend every year on Trade Ideas, Benzinga, and the super powerful computer that everyone complains in comments I don't actually need, these are all tax write-offs, legally of course. Another sweet advantage is 100% of any other business losses can be written off against trading income. So let's say you made $10,000 from trading but lost $2,000 from your Lamborghini rental service because apparently Lambos suck and I like my Civic more. Your true taxable business income would be $8,000. The same works the other way. You can write trading losses against other business income. If you made $100,000 from employment and $10,000 from trading filing as capital gains without write-offs, you pay $27,669 in taxes in BC, whereas filing as self-employment income, you pay almost $2,000 more. But remember those sweet write-offs. Let's say you spend $3,000 on DVDs, commissions, and computers. You can write that $3,000 as expense against $10,000 income, so only $7,000 is taxable, and you'll pay $28,435 in taxes. In comparison to capital gains, it's really not that bad. Okay, it's pretty bad actually. That's almost $1,000 difference. That's 76.92 bowls of Japanese ramen we could have bought. Now that we're talking about trading as business income, another important topic is trading in your TFSA. I get asked this question a lot. Can you trade in your TFSA account? The quick and easy answer is no if your trading behavior, according to the 4 factors, constitutes business income. TFSA stands for Tax-Free Savings Account. It's meant for personal savings and investing, not to be used for business activities. There have been instances of the CRA challenging individual TFSA accounts in court because they assessed trading activities within TFSA to be closer to business income rather than investing. But if you've talked to a CPA about your TFSA activities and they think it's closer to investing, maybe you swing trade once or twice a month and still have a full-time job, then there's nothing to worry about using your TFSA account. Again, whether you're a day trader or swing trader, the most defining factor that tells the CRA whether your income should be capital gains or business income is how often you trade and how long you hold positions. Each buying and selling activity you perform is recorded on a T5008 form, which records your name, social insurance number, the securities you bought or sold, and transaction dates. And yes, you already know the CRA will have access to these tax slips. Again, it's up to you to talk to a tax professional regarding your situation. Do not cheap out on this. Paying taxes means you're making money. It's a good thing. If you want to live in this amazing country and enjoy all the social benefits, then you should pay your dues. Again, you do not want the CRA going after you. If this video helped clarify questions about day trading taxes in Canada, please drop a like and subscribe for more content. The foundation of proper tax compliance starts with meticulous record keeping. Every single trade needs to be documented with the date, security, purchase price, sale price, and commission paid. Maintain a detailed log of all potential business expenses with receipts. The key is being proactive throughout the year, not reactive when tax season arrives. Find a chartered professional accountant who has experience with trading clients. Come prepared with your trading statements, list of potential business expenses, and specific questions. Be completely honest and transparent about your trading activities. Think of hiring a good accountant as an investment, not an expense. Professional preparation provides protection and peace of mind that's priceless. It allows you to focus on what you do best, trading, while knowing the paperwork is handled correctly. This foundation enables you to build a sustainable, profitable trading career. Remember, taxes fund universal healthcare education systems, infrastructure, and social safety nets that protect the most vulnerable in our society. Filing accurately and on time means you're doing your part as a responsible citizen. Develop disciplined habits around financial planning and record keeping. Treat your trading like the serious business it is every single day. This discipline makes tax time a breeze and makes you a better, more organized trader. Be accountable for every dollar you spend and every dollar you earn. Understanding these rules empowers you to make informed decisions. You now know the difference between business income and capital gains. You understand the CRA's 4 key criteria for classification. You know the importance of building a relationship with qualified tax professionals. Use this knowledge to build good habits, keep excellent records, find a great accountant. Pay your fair share, then focus on honing your trading skills and building wealth. Enjoy the peace of mind that comes with having your financial house in order. That's a solid foundation for achieving any Canadian dream. Don't wait. Start implementing these practices today. Book that consultation appointment before tax season arrives. Prepare your trading statements, expense documentation, and list of questions. Your future self will thank you for taking control of your tax situation now. Thank you for watching, and remember to like and subscribe for more Canadian trading content. As always, I'm the humble trader, and I'll see you next week. Keep trading responsibly, keep learning, and keep building wealth the right way in this great country of ours.